better than your currency. Splurging millions, buying houses like Monopoly. Fucking 9 to 5, man, the money is a joke to me. Buying cryptocurrency, my money in the privacy. I make it rain dollars, they watch me disappear. I'm so fly, man, I'ma need some land again.
Hey guys and girls, welcome to this week's episode of the B.Invested Birchy podcast. I'm your host, Nathan Birch, and this is the show unraveling the truth to the start of the 21st century. We're now X in the Matrix and waking up to motherfucking reality. And we have Ridhwan here again for another podcast.
That was fast. You should consider rapping.
I was thinking of rapping, thinking of auctioneers. You know, this stuff doesn't work out. Maybe I can be like 2 Chainz and...
Problem is you wear thongs. Auctioneers are suited and booted, my friend.
Fuck it, you don't like it. You like to thong them, right?
That's your gavel.
Maybe some people don't really... Yeah, it's the gavel like, sold! Imagine that.
Thong real estate.
Imagine that, right? Imagine that. A lot of people watching this podcast, they may not realise, right? Like I've talked about this for years. I actually do not own a pair of shoes. There's something that people may not know. I walk 30 to 40 kilometres a day. I don't even own a pair of shoes, right? I wear thongs. They're called Archies. They got like the art support and stuff. I'm not sponsored by them or whatever. I should actually try and get like some sort of sponsorship where they're giving
the amount of walking you do, it's a testament.
I literally don't own a pair of shoes. If you invite me to your wedding, I'll probably wear a pair of thongs there, right? Like it's just.
What do you wear to the end of your party? Those shoes.
I wore a pair of shoes just for a laugh, right?
Yeah,
it's like a costume, right?
Yeah.
So it's like it's not.
But I don't think you own them.
I did. I've actually bought them. So I don't wear shoes. I don't wear shoes.
Yeah, that's
like,
true.
People's weddings, everything. I don't wear shoes. So I don't own shoes. Don't like shoes. I just like wearing thongs. So that's why I wear thongs. So yeah.
So the question I asked you was, how much do you think about tax on the deals that you do or the properties that you purchase?
So when I buy a property, I don't. No decision I make is about tax. It's about accumulating assets. It's always about building my wealth, and it's taking the next step to move forward. Once I make that decision, yes, this is the decision I need to make, then I go back and I go, okay, what things do I have at disposal to minimise that tax, and how can I work towards getting to that position I want to be at?
Yeah, I think that's the basis of what a lot of people, in my opinion, can get wrong. They don't get it wrong. And I think it's important to structure a property to make sure that it's the most tax effective way.
Yeah.
But a lot of clients call me up and say, hey, should I buy this property? The land tax is so much.
Yeah.
And I'm just like, but that's the land tax, right?
Yeah.
Like, can you buy it in a different structure to reduce your land tax?
Yeah.
Yeah, but would you not buy the property? Because land tax is like 1.6%, right?
Yeah.
So it adds up to be a lot.
Yeah.
But I don't think it takes away the integrity of the property.
Yeah.
And I think that's where a lot of people sell themselves short. They do bad deals, like they're buying things which don't have land tax, like an apartment, right?
Yeah.
Which is not a bad investment,
Yeah.
but it's purely driven on the land tax model.
If you take it in the business, right, should I just go and not have staff because I have to pay 5% in payroll tax or whatever it is? That's the dirtiest tax you've ever seen.
It's pretty
right?
dirty.
That's the dirtiest fucking tax. It's a bunch of fucking dogs. If you're listening here, government, right? Bunch of dogs, right? They charge you, for those of you that aren't in business, they charge you for employing people 5% as a employment tax to people. It's called payroll tax when you have more staff than a certain point. But it doesn't stop me from employing staff because I want to get building a business, right? So how do you factor it in? Anyway.
Yeah, so I think it's important for clients to understand. I think it's something that we probably haven't touched upon a lot. Like we're always doing the reverse, that it's really important to touch base with your accountant, which it is. I'm an accountant. I love speaking to people. But sometimes, and I mentioned on the previous podcast, is that people ask me, should I sell a property and what is the capital gains tax in that order?
Yeah.
And I was like, hang on. Like the capital gains tax is the capital gains tax. It's fixed.
Yeah.
We can shave it down with A, B, C, D, things that you've spent on the money in the past, stamp duty and whatnot. But do you sell the property or not based on tax? I think that's ludicrous, right, in my opinion, right? So it should be outcome driven and goal driven, right? So I think it's really important that you yourself and people aspire to have as many properties as you do, to be, I guess, a little bit more relaxed, not tax paralytic about how the properties are going to affect them, because you need the properties to be able to have that problem in and of itself. Yeah. So I think it's really good. Yeah, that was one thing that I wanted to get off my chest, because I see you buy a lot of properties, and then we talk about the tax as a byproduct. But when you're scrolling through and getting the properties and doing deals and offering terms, you're not asking them about, oh, by the way, what's the land tax value, right?
I've never asked once what's the land tax value.
Yeah.
It is what it is. if there is lien tax payable in the state or whatever, or under the entity, well, then I have to pay it, right?
Yeah,
But
yeah.
and I pay it when I feel like it.
No, I think
because
that's a good thing.
They're a bunch of dogs. So. And and you look at it, it's like we're providing jobs, we're providing these sorts of things, and there's always the gatekeeper there to say, hey, give me the money, and that's why I'm so against it. And your role there is to help myself and other people try and minimise that, but it's like it's not that we don't want to pay it. It's just okay. Well, if we're doing something else, well then. How
Minimizing is great. Minimizing is what you should be doing. Trying to say, how do I not pay tax?
Yeah.
I think that's a problem.
Yeah.
Because it means you don't have any assets and any income.
Yeah.
Right. There's a lot of people whom I think as well, who say, look, I don't pay tax, I just pay interest, for example. Yeah. But all these things come home to roost, exactly. Right? So I think it's, you just have to weigh that up and take advice. I think it's probably the key takeaway from me is that practical, real term guys who do it, that have done it, not fancy videos.
Yeah.
Back to you.
There's so many videos out there on TikTok and stuff like that, right?
Yeah.
But that's my answer. A lot of people go out there and just make moves based on, like, it's very elementary level thinking, right? It's like, how can I save this? And it's like that thing that says death and taxes, you can't avoid them, right? It's like, well, you can't avoid death, right? You're going to die. Right, but tax wasn't around hundreds of years ago, right? There was different forms of tax and all that sort of stuff. It's like, how can you reduce it? Like, if you just said, "Hey, come and tax me," they're going to come down like fucking crows and take all your intestines out too, right? So it's how do you?
I actually personally think the structuring for asset protection is a much more intelligent way to look at it, right? Because it's only when stuff hits the fan that you go, oh my God, I wish it was like this. You don't think about the tax.
Yeah.
You think about the structuring, going, okay, you do what I mean? Like, so I think.
Such would never,
that's it's good. So I think it's really important that clients.
Some good lawyers, really.
I think clients, the structuring element is important, the tax element is important, but what's key and fundamental that you often talk to me about and we talk to clients about is that the integrity of the property, right?
Yeah, it's the property, it's the numbers. Like, I'm not even looking at what the property's going to do for me today. I've got properties that okay, they're shit. They might be negative 50K. There might be a mad development site. I'm buying them. They've gone up from $1 million to $5 million, right? And it's like, okay, well, I have to kind of pay the 50K a year in the hole. But what's it going to be like at the end of that? And that's what a lot of people don't look at. And I've got my other cash flow properties that are spitting out, that property I bought just before Christmas, right? That's my favourite property, right? It's giving me like 20 grand a week to 30 grand a week net, right? A week. But it's something that I want to know the asset. I want to know what it's going to do for me. I want to know how it's going to fit in the portfolio. I want to know, And I think if you've got a good strategy, like if I sell something, like maybe I'll sell this thing off and that'll help me out get out of this. But that's just options that I've got. I've got lots of options on the table.
Absolutely.
A lot of people aren't looking at it like they don't understand how money works. If you're selling a property and you're not buying something else, you're not in a money tree issue, and you're just selling it to make a profit, you got no idea how money works. Sorry, but you need to educate yourself on how the money works, because then you realise it's a waste.
Yeah, look, and I think from our point of view, from a taxation point of view and an accounting point of view, is that the clients who are aware, who make and take action on a basis of all of the above have the best outcomes.
Yeah.
Tax outcomes are important, but if that's your only outcome, oh my God, you can make some really poor decisions.
Yeah, exactly.
I stole your podcast for a bit, so you can ask me the question now.
That's okay. I've got the question to you that I was going to ask you last podcast, but we didn't get a chance to. But obviously tax season's coming up, and it's all the boring accountants out there, and they're like, give us your money and we'll write the tax return. How much tax do you want to pay? Okay, we'll minimise that. Good, see you later. They don't know what you're trying to achieve. So I've got the questions here that I wanted to ask you from the last episode, which we didn't have time for because we just got talking about all random stuff, which is cool. Obviously, it's coming up to tax time, and people can go and get their tax return done with you, or they can go to the guy in the shopping centre with the umbrella on top of his desk, right?
They're not that bad.
I remember when I was a kid, right? I remember at school, right, out of Blacktown, there was a guy that sat under the escalator, and one of the guys from school poured a milkshake on him and it bounced off his little tree, right?
That's really mean.
Yeah, I know.
I was just doing a day job.
He was, right? But this was teenagers, right? It was just, yeah. So I remember seeing that, and so it's etched in my head that accountants that sit there in the shopping centre at the end of the escalator with a fucking little umbrella on top of them.
It's a bit more sophisticated now.
They got a little booth around them.
Yeah, it's nice.
Little yellow bloody guys around there. We all know what we're talking about, right? But anyway, these guys don't know what you're trying to achieve. They're just there to go, oh yeah, excuse me sir, push their glasses up, oh yeah, we'll get you your tax return, blah, blah. You can pay them, you can pay you. They're going to pay someone, right, to do it. You obviously have a lot more sophistication because you're seeing what successful people do and what unsuccessful people do, and you can give advice and guidance around how to shift people from unsuccessful to successful and get on their journey. So the questions that you should be asking your accountant, I think the most important one is, if your goal, like you as a consumer coming to your accountant, you should be asking, like you should know what you want. Right? You should know, okay, I want to get to 10 properties. I want to get to 2 properties. I want to get to 10. I want to get to 20. I want to get retired. I want to do this. I want to get my wife retired. I want to look after the kids, whatever the case may be. You should be coming to the accountant and saying, okay, this is my view. This is what I want to do. How can you help me with that with the tax front, right? You go to your accountant and you go, asking your accountant what's their retirement strategy, right? Most accountants will sit there and go, I want to work until I'm 65. And when I'm finished, my son will be old enough and I can sell my business to my son and then I'll retire and he'll pay out and look after me, right? And that's not something that as an investor, like they don't have a view of retiring, right? And it's like they want to retire at 65. It's like, well, if you ask Rid's going, I invested in other things, you're doing other cool stuff, right? Whether you want to talk about that's a different subject, right? But I think it's important that you have a level of intellect that can help the person get to their goal, and it's not just about two-dimensional tax savings. So I guess as we're coming out of tax season, we'll punch through. There. We've got about 7 questions here, so make them short and snappy. How could someone best prepare for tax time, I guess, like coming to you and getting themselves ready?
Honestly, it's a super boring answer, but the more prepared you are, the more analysis work we do compared to data entry and sort of duck paddling, right?
So maybe have a spreadsheet.
Receipts
are you don't just come to Rid and go, I've got a box here, like a bloody dump truck on his desk with receipts. You come here and you enter it and you go, I've got my accounts balance.
Yeah.
Would that be?
Yeah, so like some clients bring it in the format of a folder, which is really neatly done and everything like that. We have a lot of clients who we push to an online, software.
And a property tracker.
Something like My Property Tracker for sure. Also just folders online that we can act on in terms of OneDrive and stuff like that. Yep. Clients update it. Anything which is organized and it means that you're not missing things. Like we catch a lot of things for clients and say, hey, we've got other clients who've got properties in, wherever, Coomera.
Yeah.
And their strata is $4,300. Yours is only $3,200.
Yeah.
Maybe you're missing a strata payment or it's gone to the next year or whatever it might be. So the more organized you are, the more analytical work that your accountant or tax agent is doing.
Yeah.
And a lot of the time that when we're doing work with clients, I say, I'm not going to give you feedback now because I'm just doing the work.
Yeah.
Come back in once we have everything set up and then we can do it. It's kind of like if all you're doing all day is preparing the meal, the last thing you want to do is eat it. Right? You're like, oh my God, just get away from this, right?
Yeah.
And we're all human, right? So it's the same thing. And it's kind of like with clients when they've just all they've done is prepare for their tax return and it's just really brutal.
Yeah.
They don't want to do it, right? The easier it is, the more seamless it is, the better experience you have, and the more time you'll spend analyzing rather than data entry.
Okay. So come prepared, come
organized,
systemized. You wouldn't see a successful business guy, whatever. You come with a set of books and say,
exactly right.
How can we do this? 1, 2, 3.
Yeah.
So,
and it doesn't have to be complicated. It doesn't have to be you're spending $70 a month on Xero or anything like that. It's literally just about going. I always tell you, properties. You got 5 documents. You got an agent, someone like Blink managing your properties. They give you an income and expenditure report at the end of the year. Mm-hmm. They can also do your insurance. So it's also on your income and expenditure report. Council strata. It's all there. So really, you've got your I&E report.
Yeah.
You've got potentially insurance.
Income and expenditure, by the way.
Income and expenditure, sorry. Your interest payments.
Yep.
And maybe a depreciation report.
3
documents.
Plus, then if you go to Bunnings and shit throughout the year, if you got a laptop that you bought for the
Well,
spare
yeah,
room,
if you've done all those type of things, keep those in a consolidated way. Jot them
Yeah.
down on a spreadsheet. You might have 3-4 documents per property, right?
Yeah.
So that means you can have 10 properties.
So I've got a question. Like, say for instance, I got since laptops are all for business anyway. But let's say for instance, I was just mum and dad at home, and I've got all these properties, and my computer was not working properly, and I need to get an Excel spreadsheet. And I've just bought that computer because I need to get everything ready and organised in one spot. Is that laptop claimable?
Yeah, so that laptop is used in the maintenance and administration of your property portfolio,
Yeah.
and either all of it or a portion of it is claimable, right?
I don't watch Netflix on it. I watch porn. I threw them off, right? So it's just purely for my property.
It's purely for,
investment.
yeah, exactly right. And a lot of clients do that,
100%.
right? So a lot of clients have subscriptions to online services,
Yeah.
all property related, for example.
Yeah.
You might have reports that you download. You might have all these
Also
other
use
things.
the internet at home.
Yeah.
I needed the internet dedicated because my work phone wouldn't
Yeah.
allow for it. So
You might not have all of it in, but it might
Yeah.
be a portion of it. But certainly
Yeah.
those type of expenses will certainly feature part of your deduction claim.
Cool. And depreciation, you touched on it beforehand. Like, is the benefit of it, or what's the benefit of depreciation? Should
So
you
I
do
think-
it? Should you not?
I think everyone knows that properties have depreciation and don't have depreciation.
Some people may not.
Some
I
people
don't
may
know.
not. Okay, fair enough. Right.
Yeah.
So depreciation is basically you can have like a table, you can have like a wall, you can have tools, equipment, and they all have a useful life, right? And that useful life is something that the tax office allow you to expense each and every year. So if you've got a brand new house that you build, like a lot of your clients did back in 2017, 2018, they've got brand new properties and there's a lot of depreciation on them because it's generally, not always, but it's generally done on a diminishing scale. So it's larger in the earlier years and smaller in the latter years. And in 2017, the tax office updated the rules saying that if you bought a property or built a property brand new or from the developer, you can claim all the depreciation, so 2 arms, 2 wings of it. And if you bought an existing property, it's only 1 wing of it, right? Which is the capital expense, right? So it's important to always understand that if you have a property, it may be eligible for depreciation, but it may not be, right?
Yeah.
And depreciation is a double-edged sword. When you sell it, you have to add it back. But if you don't sell properties like Mr. Birch here, then depreciation is kind of a gift that keeps giving, right?
But if you sell the property and it's added back, then you've got 50%
Discount.
capital gains tax
Yeah, exactly
discount,
right.
so you're going to be paying
Like
a little,
half.
little
Yeah.
amount back. Yeah.
Correct, exactly right. So depreciation is something that's often overlooked,
Yeah.
and sometimes people
So
go, "Oh,
paper loss.
I shouldn't bother with it."
Yeah.
But often we send clients to depreciation report companies, and they say, "Actually, there's about $3,000 of depreciation for the next 6-7 years. It's still
Yeah.
worthwhile, right?"
Yeah.
You know.
I see people, going back to the first question you asked me, they buy properties because they want tax deductions on it. So
Yeah.
that's fucking stupid.
Yeah,
I want to
exactly
buy
right.
it for putting cash flow on the property.
100%.
Because it's going on in value.
I couldn't agree more, right? If you're buying a property purely for tax motivated reasons, then that property has a useful shelf life.
Yeah.
After that, you've got to get rid of it, or you've got to, reconsider why you've purchased it.
What are some one-off sort of expenses that we can claim up front, like insurances, special levies, strata levies?
Yeah, look, so there's a lot of different expenses that you can claim upfront, or immediate expenses, they call them. And they are things like council rates, water rates, interest,
Yeah.
in some instances, bank establishment fees, or if you change banks, break fees, for example, which is very important now. People are refinancing and they're breaking away from larger rates to lower rates or holiday rates. So it's one of those things where if you're unsure about what type of expense that you can claim, don't assume that it's claimable. I had a client the other day who asked me whether or not something was claimable. It was quite an interesting one, where he's got an expense prior to actually settling on the property, but he's being charged the expense.
Yeah.
And he's like, "Can I claim this?" And I thought about it. I said, "Well, yeah, you do claim some portion of your legals, like the searches and whatnot, and that's prior to you actually settling on the property. So in the same vein, it can happen." So, the way that we operate with clients, and I say it again a lot of times a day when I see new clients, is that we like being transparent with clients. We like getting information. Every time you ring me, I don't send you a bill for $100, right? Because I want to know what you're doing, so that way the communication builds my understanding of what your property portfolio and your attitude to property is. So it's really important. So, if you've got a position where you've got a fee fear to touch base with your advisors, then you might need to either work on a different relationship. So you go, "Okay, I'm paying X amount a month, and I can access you as much as I want." Or like us, we say, "Hey, if it's reasonable, it's fine. Give us a call when you're buying a property, and we can have a chat with you." Right?
The more property people buy, the more they have to come to you.
You grow, we grow. It makes sense, right?
Cool. Awesome. Well, that's all the questions I had around tax time. Like, any other tips that you got?
Yeah, look, so I think one of the couple of things that clients can do is that if you do have expenses that you need to expense and they are genuine expenses, try to do them prior to the end of the tax year so you get the benefit of them immediately.
Yeah.
A lot of people look at prepaying interest. A lot of people look at prepaying some expenses, for example. There are some limitations with regard to that, so definitely ask us or your accountant. But if you're trying to be as efficient and as intelligent with your money, things like offsets and things which help you reduce your overall cash outflow that don't help you from a tax point of view are not bad either, right? You may not be 100% tax efficient, but you're cash flow efficient. Example, offsetting your deductible debt. If you don't have any other investment opportunities, is still good. You've got less tax deductions, but you're holding 60 cents in the dollar back, right? So don't be tax paralytic, which is what the first part asked you about this at the pod, is that if you thought about everything that you should do purely from a tax motivated reason, you'd have 4 properties.
Exactly.
You wouldn't have 125 properties, right? So 250, right? So it's one of those things where you need to, it's got to fit, right? If it fits, then it's good. And if it makes sense, then it's great. But the property and the underlying reason you purchase it needs to be the primary thing.
Cool. And if someone wants to get in contact with you, like obviously we're heading up towards tax season, so you're going to be really busy at that period of time.
Absolutely.
So you can't talk to you for a couple of months. What is the best way to contact you and some of the...
Yeah, look, our admin box is monitored by our staff, so info@onepathAccountants.com.au or 0298365433 will get you through to the team, and then we can help you. We'd love to help you out, and we're always taking on new clients and assisting clients who respect us and we respect them, and it works really well. So yeah, we're more than happy to assist.
Awesome. Thank you, Rid. Appreciate that.
No worries. Thanks for having us.
Thanks for tuning in. I just went to give you a 5 and you went down flat. Awkward. But, thanks a lot for tuning in, guys.
Cheers,
check
guys.
us any Thursday out on Google Play, Apple Play, Spotify, and YouTube. Be awesome, guys. Bye for now.
Cheers.
Like Bilal said, man, we stuck in the matrix. This my advice, don't care if you take it. The dollar back to die, soon to be hyperinflated. This my 2 cents, don't care if you save it. Joint be decentralized and you will see you been lied to the whole time, and it's the irony, cause they do the exact opposite. You become a slave to the system, enough your money, all they do is profit. There's no conspiracy theory, you better hear me. Crypto will set you free before the system does. I don't care if you do or you don't, but what I'm saying is the truth to the reason you choke. I've never been a failure, excuse my behavior. Keep talking, haters doing me a favor. And you're telling lies, I know what they been telling you. I'm the opposite of Donald Trump of Australia. It's amazing, here for the taking, my time is never wasted.